Mecklenburg from Start Trading. Today we're going to talk about trading reversals. There's a daily watch list I put on the website. It's free. You can just check it. And I'm going to show you, here's one way how to trade it. You can invent your own way, and I'll show you ways how you can change it up. But before we get into it, I want to remind you there's a high degree of risk in trading. Been trading for more than one day, that you can and will lose money trading. Only trade with money you can afford to lose. Hey, if you don't know who I am, I've been doing this for about 19 years. I started the website 17 years ago already. You can go back and see it. There's about 17 years worth of articles and watch lists. I do all this stuff free because I'm supported by ads. So I do want to remind you, hey, look, when you click those ads, that's what pays for everything. Again, I can't tell you to click those ads or encourage you to click those ads. That could be click fraud. But just be aware that when you click it, you see something, you're paying for the site. All right, if you hate that ad, decide that was a waste of your time, just be aware that advertiser just paid for that though. So you are supporting the site. And then, hey, I focus on mostly stocks, some futures, back-tested futures, but I have something for everybody. I've got guest content, guest webinars, sometimes recorded videos. So there's something for everybody if you're new. So I want to remind everybody that trading's hard. I understand all the marketing out there is telling you how easy it is. If you just do these simple things, you'll make a ton of money. Obviously, that's not the case. If trading were so easy, everyone would do it. No one would actually work. No one would farm. No one would work in factories. So if you believe trading's hard, you're going to do a lot of things differently, do a better job protecting your account. Corollary to that trading is hard is that no one sells money printing machines. There's nothing you can purchase. There's nothing I can tell you today that's going to magically make money for you tomorrow. The only way you're going to learn trading is putting in the reps. Learn something, try it out, back test it, flip charts for a while, simulate it, paper trade it, then maybe trade it with real money, with a small amount of money. You got to get in your reps. That's going to learn how to trade. You don't want to put in any reps. You know, trading's probably not for you, or you're most certainly going to blow out your account pretty quickly. So since I do have a strategy for you here, but as I said, you're not going to print money with it. At least what I'm going to do for you is I'm going to save you hundreds of hours of playing with a strategy or destroying a strategy. And hopefully I can prevent you from blowing out your account. So that's more than anyone else will pretty much do for you. Let's look at the keys to trading strategy again. I like to think about this when I think about a trading strategy. So I think about all these elements as I put together this strategy. Number one, control our risk. Think about the downside before we think about the upside. Again, stops are one way of doing it, but there's various ways of controlling your risk. Control your costs. Again, commissions are the obvious one, but I consider wide spreads and slips and bad fills to be a cost. You can't give up your edge on bad fills. So we usually look at, for trading stocks, you know, real liquid S&P 500 stocks. Simple is always better than complex. Higher the complexity, the higher likelihood of errors. Also, the more complex is, the less you're going to be able to replicate a lot of this stuff or have enough opportunities to replicate it. Range, volatility, whatever trading needs to move. Penny stocks that move 2 cents a day, there's no money in that, but S&P 500 stocks that move $1 or so every day, there's money in that. Heard the trend is your friend. The overall trend, staying on the side of the overall trend. I don't actually use a trend filter in this at all, but that's one way of doing a filter. Obviously with that breakout strategy, whether or not I'm above or below the 50-day moving average is kind of my trend filter. It's a trend filter in that RSI strategy too. Momentum. So, hey, is that trend speeding up or the near-term trend speeding up? We're going to use momentum. We're going to go in the direction of momentum on these reversals. Confluence of leading indicators. So again, new traders are interested in off-the-shelf indicators. RSI, MACD, stochastics, because they think they can print money, but we know that's not true. You can't print money. A lot of people would say, well, the problem with them is they're lagging indicators. Well, if it's a derivative price, everything's a lagging indicator. So what's a leading versus lagging indicator? I say, look, if it prints across the price charts, that's kind of my leading indicator. So we want to know our entry and exit when we take the trade. So if you're waiting for RSI to hit 35 to exit your trade, you have no idea what price that is because RSI prints below the price chart. So things that print across the price charts, your major moving averages, trend lines, recent highs and low, today's high, today's low, a Fibonacci, Elliott wave, those things print across the price charts, and confluences, two or more of those things line up. Again, simple is better on something like this as well. And then last, hey, our target's significantly larger than our stops. As an individual trader, you're going to be right about 50% of the time. So how do you make money? Well, it's because your winners are bigger than your losers. But you cut your losers once you're outside of normal volatility, and you ride your winners to even bigger wins. Easier said than done. We're not wired to do that. We're wired to do the opposite, just as we're wired to make things complicated instead of keeping them simple. We're wired to want to be right. So it's very hard to accept you're going to be right about 50% of the time. But these are all the things that we need to put our reps in. This is why you got to get in your reps. You're not wired to trade profitably. Get in your reps and you can train yourself to trade profitably. And then this is a day trading strategy, and this is the same goals for that breakouts momentum that I look for. We're looking about 4 to 6 cents per share per trade. So hey, multiply your share size to get a dollar figure. 1,000 shares on every trade would be 40 to 60 bucks per trade. So if your average winner was 30 cents, your average loser was 25 cents, that would, and you took equal number of winners and losers, that would average out to 5 cents, so $50 per trade, right? So if you're day trading something, maybe you're looking for about 100 to 150 trades per month. If you can pull 4 to 7 points out of the market, you're probably doing pretty well. You can make a living at that. So you can multiply your share size to get a dollar figure on that. Hey, whatever the rules are, we're going to follow them. This may not be an automated strategy that your computer can do for you, but you're going to trade it like you're a computer. The rules are the rules. I'll show you how to adjust those rules. And then keep in mind that money management will always improve your edge. So when you're playing with the rules or testing out different rules, focusing on the money management is generally a better place to focus than you changing the rules of the setup. And then I like to use back-tested principles. Things I know from back tests that I do, I like to implement those. May not necessarily carry over to every single stock, but these are principles that generally work. Like getting in trying to find the trend early and stay with it for the whole day. All right, if you're new here, this is I like to show a chart like this. It could be any stock. I just wanted to show you on this that these big days, big wide range days happen all the time, right? They happen regularly. Even better if you got a small wick in the direction of that big move, like I'm pointing out, that's telling you if you had guessed right, flipped a coin and guessed right, long or short, and held to the end of the day, you would have had a really big winner, right? Versus this has kind of a big wick in direction of trade. Same here. So you might have guessed wrong in this. We're looking for an early trend and try to keep it into the close, and that's how you can find these big winners that happen a lot. All right. So that's the point. I want to try and jump that trend early and then stick with it. That's how I get a big winner. If I'm wrong, I get knocked out, then my loss is much smaller than my big wins. All right. So reversals, what we're looking for here, reversal bar. Most of you guys will recognize this stuff. from charts. I'm going to show you kind of the classic thing and then tell you like, well, you really need to use something a little bit wider here. But we're looking for a gap up and a close lower and then close in the bottom 25% of the bar. I like trading strategies that are symmetrical, same rules, only opposite for long and short. So short, hey, gap down and then close higher, close in the top 25% of the bar. Again, we're going to go in the direction of momentum. So a gap up and close lower, we're going to short the next day. Gap down, close higher, we're going to go long the next day. Right? So here are very obvious. So I use TradeStation here. If you use candlesticks with the trend, it's going to color the bar for you, right? So these are your typical candlesticks, right? If it's a up day and an up bar, it's going to be green and it's going to be transparent. If it's a down day, down to down, so meaning it closed lower than yesterday, there'll be a red bar, and if it was a down day, opened and closed lower, it'd be a red bar, and it'll be solid, right? Those are your typical bars here, up day, down day. But then we get these gap days, right? We get these weird days that were very easy to see when we use trending with our stuff. So this is a red bar because it's lower to low, right? Close to close, excuse me. So it's red, but this is transparent because it's an up bar, right? And so this stuff happens frequently. And again, we want to go in the direction of this reversal bar. So, right, the next day when it breaks the high, we go long. The next day when it breaks the high, we go long. Next day when it breaks the high, we go long. Right? Again, it happens frequently enough. So again, this is a long side. When it breaks the high, we go long. When it breaks the high, we go long. Breaks the high, go long. So this is a day strategy we're doing. So obviously this something like this didn't trigger. It never broke the high the next day. But if you're looking for some longer term, maybe you can start investigating this. I'm just going to focus day trading because it's the easy way to get in the reps. Short side, same thing going on, only opposite. Again, these are very obvious to see on a classic bar like this. Right, it's green. So again, it's green because close to close, it's up from the previous day, but it's solid because it's a down bar. So basically gapped up here, the opens up here, closes down here. Right, so again, they're very obvious to see then, because now you got these solid green bars, right? And again, we want to break that low, break the low, trigger the trade. Break the low to trigger the trade. Break the low, obviously it didn't break the low, there's no trade there. Can break the low, trigger a trade. Does that make sense? Again, I'm showing you these obvious, these are the reversal bars that people like to pick out as something special, and they show up. The problem with these bars, where we get this solid green bar or the transparent red bar, is they don't actually happen enough. So I want enough chances on this stuff to trade. So that's actually part of the filter I'm actually going to remove. We can have a reversal bar or a gap up and close lower, but it doesn't have to necessarily still be an up day, right? If it gaps up and closes lower and still a red bar, that's still a reversal bar. Just as on these, look, if it gapped up and then closed higher than the previous day, well, then it'd just be a green bar, but it's still a reversal bar. All right, and I'll show you this on the scan. Right, but these are easy to see, and I want you to show you this stuff. Break the low, trigger trade, break the low, trigger low, break the low, trigger a short, excuse me, break the low, trigger a short. All right, so here's the scan that I use in TradeStation. So I want above 20 bucks. If you really want liquid stuff, you probably want to be above, 2 million shares. Sometimes I just don't have enough stuff. You want some type of range filter here. I just use 40 cents, but you could use something bigger if you want. And like I say, showing this is a gap down and then close higher, right? You gap down here, closed higher, and then this is my momentum bull indicator that I created. It just tells you I can set where in the bar it closes. It closes above 25%, the top 25%. See, this last thing is not checked here, and that's close to close. So if I wanted those transparent red bars, I could click this. But like I say, they don't happen enough for me if I want enough trades. But if you just wanted to focus on that, you could leave that in. So that means, hey, if I left that in, it means it closed lower, closed to close. It closed, today's close is less than yesterday's close. It'll get you that transparent red bar. But I uncheck it because I don't feel like we got enough setups. So short side, hey, same thing, only opposite stuff going on here. This case, gapped up and we closed lower. This is my momentum bear indicator, meaning we're in the bottom 25%. And again, unchecked here, close to close. That. If we wanted to check this, then we get those solid green bars only, which is close lower on the day, but we're still above the previous day's high. Again, I unchecked that, so we got enough stuff to do. We still got reversal bars, right? And all we want to do is the next day, so I can show you just straight to the point is, right? So we open lower, so that's a gap down. That's your opening lower, gap down. We're closing in the top 25% of the bar. So that's our setup. And then the next day, when we break the high the next day, that triggers a trade. My line here is drawn right at the high of the previous day, but we know from my other strategies, usually it's going to be, X amount beyond the previous day's high. What, 1 cent, 5 cent, 10 cent. We'll go into that just a little bit, but break the high, trigger the trade, going in the direction of momentum, right? So we kind of gap down, close in the top 25%. So we know the next day we're going to trigger a trade when we break the high of this setup day. All right, makes sense? Short side, again, gapped up, closed in the bottom 25% of the day. So the next day when it breaks the low of this day, triggers the trade. All right, gapped up here, closed in the bottom 25% of the bar. So next day when it breaks the low, we're going to trigger a trade. All right, pretty simple to the point, just like all my other stuff. And you can play around with these rules. But again, I'm looking to break the previous day's high or low. Again, what does that mean? By 1 cent, 5 cents, 10 cents. Good news is it all works. You just need to work on, you need to pick your exact rule and then test how that works for you. I'll show you how to do that. And also pick another rule and then test which one's better. So you want the first month, you're going to do 10 cents. That's your initial rule. And you're going to see, hey, what happens if I do 2 cents beyond the high or low? All right. We're going to toss stocks that do the opposite. Essentially, if you're going long, it breaks the low of that bar, just throw it away. It went in the opposite direction. You can start with a stop of 20 to 40 cents. They're both going to work. 40 cents is going to give you more room. I find newer traders like tighter stops though. Just say, hey, 20 cents. Break even stop. Again, I find new traders like tighter stops, 20 cents. Can try to target end of day, hold as long as possible for the biggest possible win or catch that wide trending day. All right. I've got a list of liquid stocks that I scan, say S&P 500 are good ones to look at. But you can maybe figure out a list you're interested in. Again, I post a list on the website. And again, most trades won't trigger. You won't necessarily get that follow through, right? So if these were your rules you wanted to do, keep a spreadsheet. Just come home and paper trade it. When you get home with your rules, keep a spreadsheet for your initial rules. Keep a second one to test something. Okay, here's my second sheet. I'm going to test if I get a better result with a tighter trigger. And then you can see at the end of the month whether or not that worked for you. If it didn't, stick with the initial rule and then test something out. The next month, let's see what happens to the 40-cent initial stop. Test that for a month. That works for you. Keep it or throw it away and move on to something else. But keep those spreadsheets to figure out what rules are going to work for you. Trading strategy is always going to work better when you use your own rules and you pick your own rules and you know the rules backwards and forwards, mostly because you created the rules yourself. But principles are all the same here. Hey, special rules I want to go over, always come up wide spreads. Again, I generally don't trade the first 5 minutes because I'm waiting for the spreads to come in. We can't give away our edge with a bad fill, especially if we're only expecting 4 to 6 cents per share. So don't trade the first 5 minutes perhaps, or wait for the spread to come in, or make sure you get a good fill. If you can't get a good fill, just walk away. Time limits. Again, a day strategy like this, I don't take trades with less than 2 hours to go, because for us to have a big winner, it's a function of time. At some point, you got to cut it off. Okay, I can't get a big winner, cut it off. So I generally use the 2-hour time limit here. And then gaps, some special rules for gaps. Look, I always want to be going in the direction of the trade. So I'm going long, I want the stock moving up when I take the trade. I'm going short, I want the stock moving down. So how do we handle gaps, right? I don't want to catch a falling knife. So here's an example of a not being able to get a fill right away and a time limit. Actually use this on a different strategy, but this still works here. So if I don't trade the first 5 minutes, this is where we are 5 minutes in. We're beyond my entry, so I want it to come back. So do I want to put a limit order here and get filled at my price? Well, I could be catching a falling knife like this, right? I want it to turn around and come down through the price. In this case, it did, but it did it with less than 2 hours to go. This is my 2-hour line, so no trade. Here's how typical kind of gaps work. It gapped down and came back. Hey, you could have put a limit order in. You would have won on something like this. That one was perfect. Filled you and then went in the direction you want. But more likely it's like this, fills you and then goes against you. So for gaps, what I like to do is I like to use 2 5-minute bars that close, right? 1, 2, and then goes in my direction. So 2 closes, and you can kind of figure out what rule is going to work for you. Maybe you want 3 closes. Maybe you wanted to go X amount. You wanted to go at least 10 cents through the entry before turning around, and then on the next bar. So, but you just don't want to catch those falling knives like this. But that's how I trade a gap normally. So again, if we're trading a strategy, something like this, 4 to 6 cents per share is a pretty good strategy. And then maybe you're doing 100 to 150 trades per month. You can pull 4 to 7 points out of the market. Again, I showed you how to kind of pick your rules, follow your rules, put it in a spreadsheet, test out rules every month, see if something else works better for you or not. And then really play with those money management rules. Like you putting a filter on top of these setups, that's not really where your time is best spent. It's really figuring out what type of stops you should use, type of break-even stop, what type of trailing stop, how do you squeeze out extra few cents per trade. So I want to remind everyone that repetition is the key. Trading, you got to get in your reps, come home from work, score this, just paper trade it. Then you can simulate it. Then you can trade 100 shares, and then you can decide if something's right for you. You're always looking for small edges that you can exploit over and over and over again. You want to test your rules. Look, back testing is great, but it's hard to back test a big basket of stocks, just so you know. But, you know, keeping a spreadsheet, flipping charts, that's a good way to test stuff every month, see what would have happened, and then have that process, have a regular process. Like I say, of testing something every month to maintain your edge. And then, hey, look, these are pretty similar to the rules that I showed you for momentum and breakouts. It's because, look, you can trade different setups pretty much the same way, same type of rules. Once you kind of figure out how your universe of stocks works, and that, look, if this doesn't work for you after you put in the reps, great, you didn't waste any money. That figuring out what doesn't work, especially by paper trading, it's going to get you one step closer to finding something that will work without you blowing out your account. Okay, so on the website, just so you know, it's reversal stock trades that I post. And so you can go back and look at these if you want. Go back years and look at this. So big down day, so I didn't have anything to the upside. And so that happens with the reversals. And you can also see, since we had a giant list, I can see which ones actually had the solid green bar. So it's still it's an up day, close to close, but it was a down bar. So down, open to close. So we can see some of these Teslas, all this airline stuff. But again, we don't necessarily need that. It gapped up and closed lower is really all I care about, right? Here's Exxon, gapped up and then closed lower. So we still get a solid red bar. If we just focus in on these solid green bars, we generally don't have enough stocks day in and day out. So that's why I do that. Again, you can find this list on the website. All right, let me know if you have any questions about anything to do with trading.